Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing when is a trend likely to end. The one common thing that all traders have is the desire to enter a trade which turns into an extended rally and bags an awful lot of pips. In reality, it doesn't often turn out like that. Trends run out of momentum, price action turns abruptly, sometimes without any clear indication as to why it happened. Traders become frustrated with the amount of stop-outs they have to endure while waiting for the profitable trades to materialize. So what are the main reasons that trends end? Let's take a look at a couple of examples. This is a screenshot of the GBP/USD pair on the 1 hour time frame. Firstly, we note that the extended rally of 483 pips was to the upside. The rally ends at the end of the US trading session, where the US traders will have no doubt taken their profits before the end of the session. And with the start of the Asian session, price action begins to fall lower. In total, it falls 200 pips, where this trend finishes due to the US retail sales economic data figure, which was released at 1:30 GMT on the 15th of April, and which was 8.7% month to month. This very poor number was seen as fallout from the coronavirus pandemic. Price action then turns north, where we have another rally to the upside of 138 pips, and which runs out of steam at the end of the European session and part way into the US session. Here we have a 1 hour chart of the US dollar to Swedish krona, or USD SEK. The first trend we see is a 220 pip move to the downside, which would have been considered oversold, and where price action is reversed in a classic V-shaped reversal pattern. Price action consolidates before falling again and fading into the consolidation phase, before we see a bullish trend up to the key level of resistance, and where that key level is at 10.000. The next trend is lower, where we can see a lot of tails, both bullish and bearish candlesticks. This usually means that there is uncertainty in the market. Eventually, price action moves up higher and to above the previous key level of resistance, where this reversal is a classic V-shaped reversal pattern. Another common reason for trends to end is areas where price action stalled and reversed previously, such as this low and previous low, which is also known as a double bottom or an area of support. Areas such as double tops, where traders see that price has previously been in an area of resistance and where price will be rejected multiple times as the area is seen as a barrier. In this example, we can see that the trend reversed on 3 occasions, at very similar areas of resistance, and where after the third move higher, the price action aggressively gets sold. These are the types of trend fade-outs and reversals that you will regularly see on charts, but where else might you expect trends to end? Well, there are many different reasons that trends ends, but the most common reasons are time zone changeover. Because of technical analysis, there are signs that the pair is overbought or oversold, or just prior to or just after an economic data release, or perhaps because of profit taken after price action begins to fade. It might be due to the run-up to a key policymaker speech, or in the aftermath of a key policymaker speech. There is also reversal in price subsequent to economic data release, an emergency or unplanned data release, or even because of rumors circulating in the market. It might also be because of unexpected events in other financial sectors, including oil or the stock market, or perhaps there is not enough buyers or sellers to maintain the momentum. A classic sign of the end of a trend is when price action begins to consolidate into a sideways motion, and you might see this during the lulls in the market or at the end of the Asian, European, or US sessions. Traders buy and sell a pair based on their trading portfolio requirements. If they trade for large institutions, or perhaps as speculators, or because their balance sheet requirements have a need to add or sell that particular currency, maybe they have import or export requirements, they may have simply seen a good trend and just jumped on it. But when this session came to an end, they closed out their interest and took their profits. The bottom line is that we never know when the balance of buyers or sellers are dominating the price action, which in turn results in price action shifting one way or another. Technical analysis is usually a very good tool to be able to determine when price action trends are coming to an end. So keep an eye out for long tails, the possible reversal in price action, small candlesticks, consolidation, sharp V-shaped reversal patterns, time zone sessions coming to an end, or a beginning. Be very careful with regard to entering a trend that has gone on for a considerable number of pips, especially in the hundreds, because if you are not correct, you could see a sharp price action reversal, leaving you looking at a financial loss when making a trade. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.